Don, good morning. Black Cat, good morning. Yeah, Palantir earnings report hit the double top 125 area and then failed. So at least for now, it's kind of resting on the ascending 10-day right now. Right, the resting ascending 10-day is 112.88, and we're kind of down right near that level right now. So we'll see if this thing wants to hold the 112 area effectively. Yeah, I wouldn't call. I mean, rug pulled. It's like, what would you call it on the way up? Right? I mean, this thing went, almost 90% in 20 trading days in 4 weeks. So, yeah, I guess rug pulled. But, on the way up, it was the short destroyer, basically. Tried to step in front of it and it was killing you. And again, this is just pulling back to an ascending 10. So while it does look super nasty, it's going to open up right here. I mean, that's not that crazy. That's still up from the lows, 67% in, 21 days. Rob, good morning. Yep, I have a long in Baba. I'm already sitting in Baba. And from 2 days ago, I'm short NVIDIA. So, not everything is working perfectly, but we are green on all my trades. So that's all I can ask for. And the trades that aren't working, you cut them quickly. This Netflix, you would say something similar yesterday, right? It also got rug pulled, but it rug pulled right back to the ascending 10 and bounced. We don't know, we'll have to see if Palantir can do something similar. Today will be a day where we get, some good answers as to what the market's trying to do. Spot just needs a little bit more consolidation before it goes through all-time highs, in my opinion. Got the dogs barking out the front window. Morning, Fred. Yeah, the higher low setup. So effectively, the way a higher low setup is, the way I like to think about it is first you get a move up and then you get a pullback, and sometimes that pullback might be 2 days into an ascending moving average. And then the way I'm looking to enter it is to take out a prior day high. So I remember one of the cleanest examples because I played it, and obviously I can pull up a few more for you here in a moment, but NVIDIA was how I actually learned the setup. So, right, you get this little breakout, and then you get a pullback into an ascending moving average. And you could see how this thing is just every time it pulls back, it's building a higher low. And then, you're looking to buy over that red day's high. Celsius, I remember another one. And this thing pulled in, right? So this thing goes, and then when it pulls back in, now this one isn't as perfect because it just found support on a rising moving average. But effectively, if this was your low, right, from your gap up, right, this is your higher low as it's finding support on a rising moving average, and you're just trying to take it over prior day high, right? So, something like 42.14, 42.25 basically would be something like your entry. I shorted NVIDIA twice. So starting 2 days ago, I'll tell you where I took it. First spot I got it was 114.30, or sorry, 112.54, and then 114.30. So yeah, with the higher low setup, you're basically just looking, like I said, the most ideal structure is where you're finding support against a rising moving average, and the stock keeps building higher lows. Like you just kind of see it stair stepping, and every time it pulls back to an ascending moving average, if you believe that the stock is just kind of starting to get rolling, you're looking to buy it over prior day high, of a pullback into an ascending moving average. So instead of like playing that red candle into a ascending moving average, you're waiting for a little bit more confirmation, which is then it starts to break out over prior day high. And then either you're using that low of day of the day you buy it or the low of day of that red candle. What is AMD doing? Well, AMD was acting pretty decent yesterday, but it's got earnings today, if I'm not mistaken. So it's not really doing anything. It's just been a laggard this entire time. Yeah, it's got earnings today. This will give us a little bit more clarity into the AI picture and what CapEx spend might be, as it relates to them, and then down the road, NVIDIA. I talked about gold in the Discord 2 days ago, and I wasn't really going to chase it. And so, like, when I was making the video, this is what I was noticing. And then obviously, pulled back. And then when I went to sleep, and then the next morning, this thing kind of shot out. And I don't really like buying these commodity names on gap ups. And then obviously you're getting another gap up this morning. Chart looks pretty dang good, right? And even I think I talked about this yesterday. It's like, this too keeps building higher lows, right? So buying these against ascending moving averages is really, if you're going to focus on them, focus on them against ascending moving averages. And it's funny because, like, if you looked at the action on 4.7, 4.8, and then 4.9, looks a lot like 5.1, 5.2, and 5.5. I mean, it almost looks identical, right? Like if I just showed you these 3 bars here, right? If you just saw these 3 bars, right, it looked pretty damn similar to these 3 bars. So, yeah, I mean, I'm not playing it per se because I hate chasing gap ups, especially in commodities. But, charts like wheat and precious metal look really damn good. Again, finding support on a rising 50, finding support and just holding the rising 20. There's a few more, AU, GFI, OR, which I believe reports earnings today. But this OR is just a flag. I mean, this thing is it's done nothing wrong while gold has been quote unquote pulling back. I mean, don't really see what this thing has done wrong. Yeah, MSTR strong, but there's no setup, Black Cat. MSTR strong, but literally, where's the setup? Where the hell do you buy this? Did you buy it over the pivot? Is the only spot I thought. So, you've been buying it, on 422. I mean, otherwise, where's the setup? This thing just literally went right off the lows, and then moved 65%. And then hits this little left side peak here and then starts to reject a little bit. So looks like VRNA setting up again. I haven't even looked at this one. Yeah. Needs more sideways. Yeah, I still have a little piece of Palantir. Yeah. I had 9,000 shares when I bought it. I got 2,500 left. So, and I've done I don't know if I did the best job selling it, but good enough. Sold some all in the 112 to like 115 area. Majority is what it looks like. $112 and 116s is where I sold it. Obviously, if I had a better crystal ball, I would have sold more into yesterday's push 128. But yeah, I'm still holding my 2,500 shares like a good Christian. Nothing I could really do there. No, I'm not going to hold it all the way down to the 20, man. That would effectively me be giving back all of my gains on it. So, the 10-day, really the low of 430. So 110.54 is like my hard line in the sand. I'm not going to watch this thing go back down to 101. I would effectively be flat on it, and I'm not going to give back another, $13 a game. What entry tactics do you use that have been in the back of your mind? I use several, man. First you have to understand your setups, right? So for me, if it's an earnings and it gaps up, right? What's your entry tactic? So like a 5-minute opening range break, right? A break over like a big base, a break over after hours high on the gap up, a break over pre-market high if they report in the morning. So like, what is your entry tactic? Maybe you like buying a pullback into a rising support on a 60-minute chart. So that's like what you have to really think about, if you like earnings gap ups, maybe you like high type flags, and then you're just buying it as it comes out of that flag, whether it's, a downtrending line, which I really hate trend lines like that. I prefer flat, horizontal lines. Do you like buying undercut rallies where you look left on the daily and then it undercuts a level and then reclaims? Do you like buying high volume closes a day after earnings? That's another entry tactic. So it's like, you just have to know what your entry tactic is for the setup that you're looking at. And then obviously the chart that you're looking at, you have to believe that, it can go higher. And then you just manage your risk with position sizing and then timing with the markets going higher, right? So like if I'm buying a tech name, I'm not buying tech names when the market's going lower. I'm buying them when the market's going higher, allowing my stock to push away from my average. So now it's a good question, but again, the reality is there's a lot of little factors that play into, getting into a chart safely. So you can minimize your risk in case you're wrong. Fred, great question. If I'm in a position, have trimmed it, and it sets up a new entry point, how do I manage the two different cost bases as the two different positions? And it's okay. So do I sell specific lots, or do you use moving average for the total position? So what I don't want to do is I don't want to average up and then just widen my stop to a moving average. So anytime I buy anything, I always want there to be good expected value. So if I buy something like Uber at 75 and then it sets a new buy point, but it's at 90, right? If I'm already trimmed on it, my entry at 90 gets treated like a brand new position as if I don't even have shares at 75. My lot assignment is last in, first out. So the latest shares that I've recently bought, I will get those out first in case I get stopped out. So if I go to buy Uber again at 90 on an earnings gap up and I take a 5-minute opening range break, but then I get stopped out at low of day, I treat that brand new position, or I treat that entry as a brand new position, but I'm still holding onto my shares from 70, 75, and just letting those work against their rising moving average as the initial plan. So anytime I buy more, if a stock sets up, I just treat it like a brand new position. And anytime I get a brand new position, low of day or prior low of day is my stop, or like the low of a pivot. And then, I am selling some into strength. I'm sizing improperly. So all these things really matter. And I just expect to be timing it with the market. Like, I don't just say, oh, my cost basis now, if I'm buying it some at 90 and I had some at 75, like, okay, now I've got an $82 or an $83 cost basis. Like, let me just widen my stop and I'm willing to watch the whole thing go flat. Like, definitely not, 100% not. So, if I buy some at 90, I expect that 90 position to close above my average to allow me to hold it overnight. I size it properly. These are things that I think about when, averaging up and buying a new position. I treat it as if I didn't have it at all to begin with. So good question. But anytime you do that and a stock sets a new buy point, it's like, you have to think about it like this. If you didn't already own it, is the time that you go to buy it again, AKA a new setup, is it even worth getting, right? Like, if you didn't own it at all, like, is this a setup that you would normally take if you didn't own any shares at all? No, Uber, I bought it the day after it had the red day and going back through the 50 days. So I bought this thing on 4/24 as it was going back through the 50. And in the Discord, I called this a 50 moving average undercut and rally, where this thing tries to undercut the 50 and then rallies back through. Obviously, I could have done a little bit better of a job getting this, but I was watching this thing come down on this day. I was looking for a 620 setup for this thing to kind of turn back up off the 50. Didn't happen, but the next day it did. And I just basically bought, 5-minute opening range break on that Thursday. So that's it. Just a simple 50 SMA UNR. Yeah, Vic, I don't think about stuff like that, man. I don't care about Fed meetings. I don't care about news. I don't care about, I like to know it, but Fed meeting has zero impact, on what I'm going to do with my stock, before the meeting, right? I just let the news happen and I judge the reaction to the news. I don't ever, judge the news before it ever comes out, right? It's like, I can't move my stocks up or down. Institutions have to do that after I've entered. So, news to me, Fed meetings, interest rate cuts, doom and gloom, none of it matters to me. So, yeah, Hood, I see what you're saying. So it's like a higher low setup for Hood. The problem with Hood is, even if it took out today's highs, it would still be in a range. I really want to see this high volume red days high get taken out. So over 51s, I would like to see Hood get going. I don't really want to get into Hood until I see this pretty big distribution candles high get taken out. So that's a great question, Stock Maniac. When scaling a position from 10 to 20% on a new setup, do you typically add one 10% lot and two 5% lots? If it's 5% lot, what condition trigger that last 5% add? So technically, if I just get a brand new setup, I will just add it as another 10% lots. Like, there have been instances where I do a 10% lot or a 12% lot, and then, smaller subsequent ads, so I don't like kill my average. But if I get a brand new setup, like, again, let's think about Uber, right? If I get a brand new setup on it, I would just, double up the size of the position and just treat that new ad as its own very tight stop, to low of day. So can I address how Palantir might set up for a new buy? First of all, it's a little wide and loose right now. So, first thing I really like to do is watch it find support on the rising 10. This thing may need a few more weeks, but you can view this as a cup, and now we just need to handle, right? And then a breakout through all-time highs. I mean, this is pretty crystal clear spot as a flat base, right? So it just needs to consolidate up here for, I don't know, a week or two, and then take out 125.50s. Keep it very, very, very simple, right? And at this point, I'm in just underneath $100 using the rising 10. If this thing can build higher lows, call it above 110, and then the 20 can begin to catch up to that 110 area, I'll then be using the 20 and just let this thing consolidate for, ideally 3 weeks tight would be the most ideal scenario. And so that, in my opinion, is what I think it would need, about 3 weeks, and then a breakout over 125.40s. I think could be a pretty good look, but we'll see. Like I said, no opinions. It has to basically hold out over the 10-day moving average, and really for me, 110.54 is the line in the sand. So, when this thing gapped down and got bought back up, the last thing I really want to do is watch this gap down low get taken out. So, where this thing gaps down and then instantly gets bought back up, right? So I don't want to see that low get taken out. I want to see that low hold. If that low can't hold, then, I won't be feeling as good, and I'll need to get out. The Dash reported earnings, not the best. Yeah, today, tomorrow, and the 8th are a bunch of earnings for these cheaper names. Well, really like mid caps, kind of. So we'll see. See what the hell the market wants to do. Like with the toasts, right? We just saw what they did with Dash. SE's another one. They report here soon. Transmedics is another one. They report here in 2 days. LOAR reports next week. Dave reports this week. Fortinet reports tomorrow. ADMA reports tomorrow. So many of these younger, cheaper, mid-cappy kind of names, growth names report. So Finkel's, I'm a little confused what you mean by extended from the yearly. I gauge extension from the 50 SMA. And then I gauge it based on how quickly the stock moves with its ADR, average daily range. Some people use ATR, average true range, but I just keep it to the same thing, ADR every time. So yeah, how do I determine if it's too extended from the yearly and want to get involved? Yeah, I don't use the 200. I use the 50 SMA. So, and I don't like to buy stocks more than 4 times its average daily range away from the 50. So, if a stock moves 5% per day on average, then I do not buy it when it's more than 20% above the 50 SMA. So, like, even if Palantir gapped up on earnings, I would not have been adding, right? It was already it was at the highs, it was 40% away from the 50 SMA, which means it was 8 times its average daily range away from the 50. So just entirely too extended. Yeah, AEM. I just won't be chasing these gold gap ups. Commodity names, as far as I've always traded them, chasing these gap ups for me has always been a no go. I'd rather wait for them to pull back against an ascending moving average and then look for a 620 setup off that. So, what time frame are you entering on, and what time of day? Well, I typically enter in the mornings because that's when things are most likely to push away quickly from your average. If it's a strong stock, and there's appetite to buy it, it tends to go right away. Um, you know, we're not things don't go at 10:30, 11 o'clock in the morning. I mean, they can go at any time, but the reality is that if there's real appetite for that stock, it comes in it right in the morning. It's when there's the most active participants in the market. So, like I said, if it's an earnings gap up, institutions aren't just like waiting around until 11 o'clock to be like, oh, yeah, now I'll buy it. No, they market on open, they're hammering the buy button. Just look no further than ODD. That's just what happens. So, and I'm focusing on the daily when I buy something, but my entries typically occur on a 5-minute chart. Mac, you could find that on my X page, or you could even find it on YouTube. If you're on my channel, it's posted there. Yeah, no problem, Finkles. Yeah, no problem. Yeah, I want to buy things. And here's an even more important caveat to that, man. You want to make sure that you're buying stuff in a group that's going higher on that day. So if I like gold, for instance, right, when I buy something, I want to know that gold is heading higher, right? If I buy a tech name, like if I'm buying, NVIDIA, for instance, it would be best if I bought it when the QQQ is going higher. Because then if, NVIDIA were coming out of like a clean breakout, then I'm giving my stock the best chance to work, right? And to push away from my average. And because if I give my stock the best chance to work in the market that's going higher, I can then hold it overnight, right? The reality is like all of us just want to be in a green trade, and if holding it overnight just meant giving back unrealized gains, I think we would all be comfortable with that. But like if you're just buying something when the market's coming down, you're not giving your stock the best opportunity to push away from your average. That's an issue. So CEG comes down a little bit on earnings, brings down VST just a little bit, but it looks like CEG held in there pretty well. Yeah, I saw that. That's why I just looked at it. But bull is a total POS chart. And this thing just went from 80 back to teens. I mean, this isn't something that I would ever play. Maybe day traders like it, but not me. Baba nice. I own Baba from lower. Had this thing on the watch list last night for a break back over the 50, but it looks like it's gapping up without me. So don't think I'll be buying more. Is short float a variable I consider when entering a trade? The only time that really matters, I actually don't think about it because most of the stocks that I enter are already in uptrends or coming out of really big bases. Like I don't really think about short float. When their stock has a 20 or a 30 or a 40% short float, they're normally crappy companies. Small caps that are just total dog turds. So not something that I really think about, right? Like if I just think about my current longs, Baba, Crowd, Netflix, Palantir, and Uber, why would any of those have big, short floats, right? And there were a few more that I would have liked to own, like maybe a TGTX or a TTWO. I mean, obviously both of those have come down, or even an oddity, right? Those don't have big short floats, nor should they. Why shouldn't we get into commodities with a gap up? Well, you can. But for instance, all right, so think about it like this. Two things. One, commodities are typically a whole lot choppier. And then two, gold's already up 2.4%. How much more can you realistically expect it to go up on the day? Right? You probably can't expect it to go up too much more on the day. And so if you buy a gold gap up, one of these gold miners, and then gold retraces a percent, what do you think is going to happen to the stock you just chased? It's also going to pull back. So how much more can you naturally expect out of any commodity or any ETF? Or like if you're buying the S&P 500, if you're buying the NASDAQ, if you're buying the Russell 2000, if you're buying crude oil, if you're buying gold, if you're buying Bitcoin, something up 2.3% on the day is already kind of a big day. So yeah, could it go up 3.5%, 4%? Sure. Right. But this gold naturally moves 2.3%, over its last 5-day period, right? Over its last 20-day period. Let me put this on my chart. Over the last 20 days, this thing has moved 2.4%. So we are already effectively at its daily range, right? We've already captured most of its daily range. Up or down, gold really over the last 20 days has been moving about 2.4%. So, if you go and buy the gap up, how much more can you naturally expect out of gold? And then if gold retraces a percent, what do you think happens to your gold miners that you just chased? So keep that in mind. Edward Thorne, if I use a 620 strategy on a given setup, where do you usually set your risk low of day? Do you care if you get a crossover downwards after entering at the first one? No, I don't. Because after I take my entry and my stop is at low of day, and then let's just say I get, a 5% move for my average, and then I get a 620 cross back to the downside. That 620 strategy is on a 5-minute chart, but I'm entering thinking about the daily. So anything that happens after that, right? Like if I enter on a 620 setup or a 5-minute opening range break and it moves 6% from my entry, I already improved my worst case scenario, meaning I'm not using really low day anymore. I'm using my entry as my stop. Crazy how far from the 200-day NVIDIA still is. I agree. And it's actually the reason why this is the name that I chose to short, right? Because I do want to protect myself on some of my longs as they can potentially pull back, like a Palantir, like an Uber, like a CrowdStrike's doing overnight. And being short NVIDIA while it can barely get over its 50-day, I felt like was a pretty good way to hedge my portfolio. Aerospace and defense, gold, cybersecurity. Yeah, you nailed it. Medical devices is another one. Yeah, medical devices is another one. Yeah, TDUP doing fine, but it's just so thin, brother. You need to be careful with stocks that single individuals can move. And yeah, nice gap up on earnings, but now you're going to be quite extended from the 50. This thing moves 7% per day, and now you're up at 535. You're up 80% from the 50. If you're not already in this thing for much lower, you should never be buying this today. A 620 is preferred in ascending moving average on a daily. Yeah, so I'm looking at the daily time frame first to maybe watch a chart pull into an ascending daily, and then on a 5-minute chart, just using a simple 6-period moving EMA and a 20-period moving EMA. Stock Maniac, what didn't you understand, brother? No, I don't. First of all, I don't go to 20% in a single day. So that's first. If I bought like a 10% position and then I'm waiting for a daily setup to set up, you do have two options. One, you can buy it as a whole new 10% position on the next daily setup. If you want to be a little bit more cautious, you just do them in 5% lots after the fact. Again, that's a super nuanced question because you can't really know that answer until it's happening in real time, right? You can't know that answer until it's happening in real time. And part of the reason is, what's your stop to low of day, that next daily setup, right? What's your stop to prior low day on that next daily setup? What's the market conditions like when you go to buy it? Is this a gap up on earnings? Like, let's say I own Uber at 75, which I do, and then it gaps up on earnings. Do I just buy a 5% position on an opening range break? And then do I add another 5% position on a high volume close setup? So it's really a difficult question to answer right now without knowing the real time data that I'm being given. Just because I want to make a stock a 20% position doesn't even mean that I'm able to do it. But if I get, a nice little gap up on earnings, then I am able to do it. So again, until you're assessing the data in real time, you can do it both ways. And for me, there is just no one concrete method because sometimes, I'm sitting in a position in Uber and I'm like, oh man, I want to make this thing 20% of my portfolio. Well, if it gives me an earnings gap up, is the market getting smoked when I do that? Is market gapping down overnight when I'm doing that? And then, Uber's gapping up in the morning. So it's like, there's a lot of contextual things there that you just can't answer. And because I don't have a very black and white way to do it, a lot of the things that I do are, by absorbing the evidence that I'm seeing around me. What you guys are just looking at one of my charts. What you guys aren't seeing around me is the 5 monitors that I've got all around me. So it's like, it helps me make my decision making in real time. What are the futures markets doing? What are other large names in the market doing? What are other mid-cap growth names in the market? How have they been acting? Have names been gapping up on earnings and following through? Are they acting like Palantir? So it's like we don't really know until we kind of get some of that evidence. And then on the day in which we're going to make that a 10% or a 5% extra onto our position and have it be an add-on, is the NASDAQ pushing higher? Because, or is the S&P or is the Dow Transports or whatever I might be looking at, is the ETF that Uber is in, so stocks in the group are also working well, and you can kind of get some of that evidence and some of that conviction behind, making it a 10% position and then adding another 10%. So I wish there was like just this black and white thing where I can just be like, oh yeah, on another setup, you just double it. But, the reality is that you might not want to mess up your average like that, and it might not actually be the way to operate. So like I said, I wish there was a much better answer for you, brother, but unfortunately, there isn't. I wish I can give you a better answer. There's just a lot of nuance there because of the things that are happening around you. Do I see Palantir recovering like Dash? Well, let me take a peek at Dash. Well, Dash isn't really quote unquote recovering. I mean, it's down $10 off the highs. I'm not entirely sure. The difference with Palantir and Spotify is when Spotify gapped down, the market was still pushing higher. So Spotify wasn't really fighting the market on the day it recovered, really for the few days that it recovered. James, it's a great question. When Spotify gapped down on earnings, and we can kind of look at this, right? When this thing gapped down on earnings, and this would have been 4:29 in the morning, and then obviously 4:30, and then flat day on 5/1, and then 5/2, right? And then you can look at call it the NASDAQ, right? When you look at the NQ, and you can kind of see when this thing gapped down on 4:30, let's go over here, and you had the gap down, and Palantir did something similar. And then what did it do? Right? It's like the market wasn't pulling back. So Spotify was able to just go do what Spotify was going to go do. The difference now is Palantir gaps down overnight, and the market is just kind of trickling lower, right? It's just kind of rolling in, and it ran right up into the flattening 200-day and kind of just slowly rejecting. So, the market is now going to be like a set of hands on Palantir, in my opinion. So we'll see if, Palantir can kind of even just hang out over that 110.54 area. I don't know that it's even going to be able to do that. But, when the market gaps down and then starts to rip, right? Spotify is one of those names that just gets bought up because the market's ripping, and obviously because institutions wanted it, right? When Palantir effectively gaps down on earnings and then the market continues to stay heavy because maybe it's rejecting the 200, right? When you look at this area here and it's rejecting the 200, we don't know if the market's going to go down today, tomorrow, Thursday, Friday, 4 down days, 5 down days, 4 out of 5 down days in a row. And if that's the case, right, I find it hard to think that Palantir is just going to rebound super strong, like Spotify. Now, if the market starts to rip, from this little gap down overnight and then just starts to perk back up, form like a little tail on the daily, starts to close almost into the green on the day, maybe Palantir has a chance to, to put its best foot forward and bounce off that 10. But again, we're not really going to know. You just have to think about where we are in the market, right? The market was effectively up 10 days in a row. So if I just told you the market was up 10 days in a row, you would tell me what? You would say, yeah, man, the market probably has to pull back a couple days. And then if I said that the market has to pull back a couple days, even if Palantir didn't have earnings, what would you think at the very least Palantir does if the market's going down for 3 or 4 days? You'd say, well, Palantir would either be flat or slightly red. It would be difficult for Palantir to be green if the market's pulling back for 4 out of 5 days. Exactly. Don't do no buying. Palantir has to rest. But now Palantir gaps down on earnings, right? And now you're like, oof, it's kind of a nasty reaction. And the market's now pulling back for a few days. I don't want to guess at the bottom, because if the market ends up pulling back for 4 or for 5 or for 6 days, your Palantir is not going to do shit, right? So it's like, I don't want to buy Palantir. I'd rather wait till the market starts to turn back up, and then maybe Palantir finds support at the rising 20, or, undercuts that 110 level and rallies back through, undercuts the 10 and rallies back through, just comes back into the 20 and then bounces off of that, something like that. But I'd rather buy it and time it when the market's going back up to give my entry the best chance of closing green so that I can hold it overnight. How the hell did I get so good at trading? 10-hour days, man. 10, 12-hour days, and I love it, right? It's like anybody who's in here should see that I absolutely love trading. I'm here every day, and nothing makes me happier than being able to hang out at home with my dogs and soon my fiance. So, I do it because I love it, man. And that's the only way to really succeed in this career. You have to love it. What was my entry setup on Baba? Yeah, so I actually got stopped out of Baba the first time I bought it, and then I rebought it towards the end of the day. So I'll just go to a 5-minute chart so you can kind of see. And I did get a little bit lucky, but I bought Baba right at the open, right? Like a 5-minute opening range break right in here effectively. And then my stop was low of day. And of course I get tagged out, no big deal, very small loss, like $1. And then I rebought it later in the day, right? You just put in a low, consolidated, started to turn back up, rebought it with my stop at low. And then I caught a gift overnight. And then I sold some right into the opening print. So right at the open against the 50, I sold some, still holding on to 2/3 of my position. And, you kind of see what it's doing today. It's just going higher. So 120.76 is where I'm in Baba. AEVA, yeah, it is still kind of thin, right? The thing trades $8 million a day. Plus, you have to think about this, right? It moves, call it 7% per day, and it's up 43% from the 50-day. So I don't buy stocks that are more than 4 times their average daily range away from the 50. So I would need AEVA to be less than 28% away from the 50-day, and right now it's 43. So if you're going to go buy this thing, just know that you're jumping off the 8th floor right now. And so you're likely to break an ankle or maybe even your neck if you buy this thing this extended. And if overhead is from years ago, I don't even think about it because people all in here don't own it anymore. They got stopped out. Trust me. Yeah, Okta is acting pretty damn strong. How the hell is it acting strong? Because it's in a good group. Look at CrowdStrike, look at PanW, look at FTNT, look at Zscaler, and look at Okta, right? You got 5 names in a group that are all acting pretty damn well together. Obviously, they're gapping down today, but for the most part, these names are acting really damn good. Is Rubrik cybersecurity too? I'm not sure. I don't know enough about Rubrik. Guys, I love you all. Thank you guys for the questions. It was an awesome 50 minutes. Thank you for being here every single morning. I am back on tomorrow, same time. I will see you guys in about 23 hours. Please bring questions if you have them. I got to get going to the room and start my live stream there. So any questions, please show up with them tomorrow. Again, thank you guys for being here, and we will see you guys in 23 hours. Cheers.